The White House is signaling that phase 2 of President Trump's economic push is about to begin.
There's so much good news in the new year because you're going to see the biggest tax refund season of all time. We've got like everybody in the whole cabinet working on trying to get housing to be more affordable. We're going to have a big plan to announce sometime soon in the new year.
Welcome to the Big Money Show. I'm Brian Brenberg, along with my co-hosts Taylor Riggs, Lydia Hu, Jackie DeAngelis, and with us for the hour, Fox and Friends weekend co-host Griff Jenkins. Welcome to you, sir. Good to see you. All right, Kevin Hassett revealing that top advisors are teeing up a big list of economic ideas, including a slate of housing affordability proposals. Housing costs remain one of the biggest pressure points for American families. Vice President J.D. Vance acknowledging their impatience while offering a word of caution.
My friends, there is so much more to be done. And the people saying we need to be doing more, we need to be doing it faster, trust me, I hear you. Greatness awaits every single one of you in the America First movement we are building together, but we need your help to get there. Don't hand power back to the people who tanked the economy in the first place. Join the America First movement, and you will always have a place on our great team. Next month will be the official one-year anniversary of the Trump administration, and I am damn proud of our record so far.
All right, Griff, last week I was quoting Guns N' Roses, patience.
Good.
Okay, that's the administration.
Yeah.
They want some just a little patience, okay? But this speech made me think of another one of my favorite bands, Boston. Don't look back. J.D. Vance is saying, don't go back to the guys who got you into the mess you're complaining about. But my question is patience a good political pitch? And how much more do these guys have to ask for with the American people who kind of say we're fed up with prices?
You know, that's a great point, Brian. And, you know, I wish they would steal a line I've been using over the weekend saying that you can't be the arsonist and the fireman at the same time. So if you go back to the 9% inflation that was under President Biden's term, and now all of a sudden Democrats are saying that they've got affordability solutions. Well, what is that? Higher taxes, taxing billionaires. I mean, there's no actual sort of roadmap that differs from what the Trump administration is doing. I think on the messaging, they could maybe be a little clearer on what that patience looks like. Like, walk it out for me. So I see private investment capital is going to create more private jobs. It's going to increase wages. So what's going to happen? Is the Dow going to hit 50,000 in June of 2026? Like, give me something to see.
Get in the
that
prediction.
road
You want them in the prediction game.
Well, just to walk it out a little bit, because that way you can compare and contrast. Say, Democrats are saying they've got a plan for affordability for you, but here's where we see you in 6 months from now. And, you know, look, politicians hate making predictions because if they don't come true, then it's, you know, comes back on the record. But I think that when you look at the deregulation, the tax cuts hitting, wages continuing to increase, you can probably make some broad-based predictions that Americans can hold on to.
So Kevin Hassett, Jackie, is teasing this trip down to Mar-a-Lago after Christmas, okay? They've got a whole bunch of housing proposals that he says the cabinet secretaries have already signed off on. They're going to bring them down, hash it out. Does that make you optimistic about the messaging that the Trump administration can bring into 2026? Or do you get worried that they're going to go down the road of gimmicks and it's going to actually muddle their message about what they can do in the new year?
Yes and no is my short answer. I'm glad that you came to me on housing because I'm passionate about this. I think the Trump administration has been sitting on some things so that they can do some reveals. They've worked on the things they could handle right now, and they're looking at housing and saying there still is more work to be done. The good news is you've got a 30-year mortgage, according to Freddie Mac's website, at 6.21%. I think there's room for about a point reduction in that over a 6-month time frame. Remember, in May, we say goodbye to too late. Okay, so no matter what the Fed decides to do until then we're going to get somebody new.
Are you going to throw a little party for him in May, like a little?
I mean,
too late is right now party or something?
You know, I may have a couple of drinks, but not for the reasons he thinks that I am. No, but so this is a positive thing for the market overall. I don't want to see rates go artificially low to zero when you talk about gimmicks, but I think there's about a point there, especially with that inflation number coming down. The Fed can focus on the labor market. Right now, the labor market is signaling that cuts should be on the way. So that's point number one. Point number two, there are different mortgage situations the president's looking at. Personally, I find these a little gimmicky, and I'm not a huge fan of the portable mortgage.
The portable
or the 50-year.
Or the 50-year mortgage, okay.
Yeah, like let's stick with the 30-year fix. Let's get rates down. Let's get supply up. And all of a sudden, good things will start to happen. I don't think you need to complicate it in that way. But there's one thing left, which is cutting the capital gains tax. They have floated that. We were talking to Steve Forbes about it last week, and he was saying if you cut that, you're going to open up floodgates in a major way, increasing revenue for the government, because people are sitting on that, locking it up because they don't want to give away what they think is their equity and what they've earned, or the appreciation on the value of their home. And so when they sit on it, the government gets nothing, actually. So now maybe you'll get something, and people will feel like they're getting something, and you create a situation where people can downsize and they can move around a little bit more freely. And then, of course, the administration has been reducing regulations to get more people building. So I think they'll continue with the push for that. But all inside that neat little package that I wrapped up for you are some things that they can do for housing.
So, okay, so the housing piece, and I think that is one of the biggest things on people's minds. Lydia, the other area is the ongoing debate around inflation and price increases and so forth. I thought it was interesting, Steve Moore over at Unleashing Prosperity had a piece out today. Last week, they talked about some of the areas where prices have come down. This piece today was about the products where prices have gone up, and it's got things like coffee on it, frozen fish and seafood, jewelry, bananas, flowers, etc. You're my legal eagle on tariffs, okay? We may get a decision, I don't know by the end of the year, but early in 2026 on whether the tariffs stand. Do you think if they went away, in other words, if the administration lost at the Supreme Court, it would actually help them on the cost of living front next year?
You know, that would be a really good way of selling that, of kind of spinning a loss in their favor. And I wonder if they would actually do that. I don't know that I would be prepared to expect that, just given the fact that we've seen some other messaging coming out from the administration about how successful tariffs have been with reinvesting and reshoring and bringing jobs and opportunity back to the United States. And they've also been so out front with the plan B that is to come, all the other provisions that they can rely on, that if IEPA were to go away, then it wouldn't be the setback that what Democrats would probably would try to sell it as. You know, what I'm thinking about, just kind of a little bit more on that inflation point too, what a victory that was last week to get that CPI read. I'm sure you guys covered that left, right, and center, like all across the board. But all along, we've heard about how you know, tariffs are just going to drive inflation. If that wasn't an illustration to the opposite, where is the inflation? In fact, it's coming down. And I think the prediction is that it's going to continue to come down throughout next year. So more on the affordability battle there. The other point that I would make is that it feels like this wrestling with the affordability messaging is really just that. It's a wrestle over the messaging. And sometimes I do wish that President Trump was a little bit more clear when he would come out and talk about affordability being a hoax. When I hear him talk about that, I think what he is saying, and this is up to debate, but what I think he is saying is that Democrats are lying to you when they say that they are on your side in this affordability fight. They created this mess. They are making it worse. What they've taken this term, affordability, they're actually wrapping it around. It's like a new equity argument. It's not really about helping you earn your American dream. It's about what you're entitled to and what can we take from others so that you can have too. That's what I think this affordability debate is on the Democrat side, which is a different conversation than what President Trump is actually having.
It's the same old policies, but with a new title and wrapping for 2026 and a new set of candidates, Taylor. You watch markets, you know, people in markets are not a perfect indicator of the health of the economy, but company profits are a pretty good indicator of how well American businesses are doing. You hope that redounds to the benefit of workers. So you look at the markets up today, you look at corporate profits, and you look at what that could mean for the average person next year. Do you think the Trump administration has a lot of wind at their back?
I do. 25 points from a record on the S&P 500. 6,900 is level that we're watching at, so we are almost there, which is incredible. Thinking about a couple weeks ago, we were talking about how big tech was really pulling everything down, and we were really talking about this AI bubble, and so it's sort of been climbing that wall of fear that gets us back there. But if that is an indication of a stock market looking 6 months into the future, they like what they see, and therefore I would hope that workers like what they see as well. Speaking of markets, NVIDIA is the big one. They're leading some of the gains today because the Trump administration, according to some reports, have said that they'll reopen up the H200 chips to China. That's a huge win. Micron also is in there, that may be getting access to China-approved chips. So I think this is an administration that certainly sees some of the geopolitical risk of China, but also wants to help American companies win in that environment. You could argue today NVIDIA and Micron are some of those. Final quick thought, Brian, on housing affordability. I'll bring this full circle for Jackie as well. This is according to Bank of America data. So if you have a checking account or like a credit card with Bank of America, they can track all the payments, what's coming in, how much you're spending on rent, if the number that you're spending on rent or a mortgage is up year over year or not. They said that housing supply has steadily increased through 2025, easing some of the pressure they see within payments data, particularly within the rental market. Rental growth has been cooling. No rental payment growth in October 2025 for the first time in 3.5 years.
Wow.
There are some specific cities where it's flat, like Austin, Phoenix, Miami, Orlando. Year over year declines compared to 2022. You're seeing double-digit declines. Phoenix, Miami, Nashville. So you're starting to see pockets of housing where rental price growth is negative. And then further, they go on to tie in that the extra money I'm getting from not having to pay as high of a rent is going to discretionary income, disposable income. So I'm now a consumer spending that money, which then supports this. Walmart, the #2 shopping app downloaded last week, Target #3. So free shopping apps.
Target #3?
It's Walmart and Target. So that sort of, all of that tracks with how consumers are thinking about moving their budgets.
And if that rental price decrease continues, that's a huge help for inflation. The CPI is so heavily weighted to shelter costs.
Not surprised, though, by the cities that you mentioned for those growth decreases.
Very, very interesting. Okay, you're watching one of your favorite deals. Self-driving taxi stuff. Waymo, what's going on?
Pop quiz. If I had to put you in a Waymo or a Tesla, what would you pick? Down the line, go.
Tesla.
This weekend, Tesla.
Tesla.
I'm not getting in a Waymo taxi ever.
Okay.
We just a couple of weeks ago had one drove into a police standoff.